What's up, you guys? It's Matt here. So in this video, I think we need to talk about an update on the Fed meeting, Jay Powell speaking, what he said, how he answered the questions, and what questions really came up that I thought were good. If he answered my questions that I had, because I wanted to know basically on the interest rate, the size of the interest rates increase, also the timing and whether they're going to basically continue to raise interest rates until we get to like 2% inflation or around that area. Like, what's the idea with that? So we're going to get into all of this. Make sure you guys hit that like button, hit that subscribe button, hit the notification bell for more videos like this one. And if you guys want to check out some of the links down below, feel free to check out those links. And again, if you guys like this content, feel free to let me know, and I will do more content like this. But just to give you an understanding for people that don't understand, if you don't know how the two are related when it comes to inflation and interest rates, I have a little blurb right here. So in general, interest rates and inflation are inversely related. With an increase to one usually brings about a decrease to the other. This allows central banks to manipulate inflation levels by altering short-term interest rates. So just understanding that little blurb, that little piece of it, you can understand why these two are so alike, so not alike, so related, right? So as we understand, and everybody's always talking about raising interest rates, and some people really don't understand, it affects inflation. It affects the pricing of goods, and obviously people that are affected a lot more, whether you are, middle class or you're a poor individual. Obviously, it affects you a lot, because if you have to pay more for the things that you're used to getting for a certain price and you're still getting paid the same amount, it's obviously an issue. So then you have to worry about wage increases, which, from what I understand, wage increases, they are getting stronger and stronger, but it varies from company to company. So just to get into some detail here, I did take some notes as I was listening to the meeting when I was working. And basically, in his little blurb that he had in the beginning, he was talking about how, the main issue, or a big issue, is inflation, right? To understand that we are at 7% inflation, to understand that we are at the highest inflation that we've been in such a long time. Just seeing by this blurb right here, in December 2021, the U.S. inflation rate hit 7%, the highest figure since Reagan's presidency, the seventh consecutive month above 5% inflation. President Biden has been under pressure to bring the 40-year inflation under control for fear of soaring prices. So basically, any low-income individual will obviously see that struggle, because you're going to have those prices increase, with that 7% inflation. So bringing it under control would obviously be the best thing for everybody, right? So before we got the meeting started, there was some information that came out, some good news. But the issue that we were seeing beforehand, before everything took place, it wasn't an issue, but we were seeing the market actually increase. We were seeing the SPY up. We were seeing AMC, GME, all these positions that were making some moves. They were up, 10%, 11%, 12%, 9%. Like, you were seeing a lot of things that were up. And then as soon as Jay Powell started to talk, right, everything started to really tank. Everything started to react to just a prepared statement that he has that was very boring, in my opinion. The only thing that really mattered was to understand what the core issues were and how he felt about how the economy is running right now. He did say that wages were on the rise, and obviously we see that a lot of people are struggling to get people to work, especially with, more fear of, any type of health issues, I would call it. And obviously it's more and more difficult to hire some people. And I think with increased wages, it obviously helps out, lower income individuals, because then you raise that income. But if inflation and all the prices start to rise as well, it ends up getting very, very difficult there. There was a Q&A section, which I thought was the most important piece, because obviously you get asked the questions that matter the most, related to what are the hikes going to be, related to the timing behind it, related to the job market, and just a bunch of other stuff. So one of the first questions was related to rate hikes, and if they were going to front load the rate hikes, which was automatically like kind of shut down. That that wouldn't happen. Actually, it kind of uh, pushed the question to the side a little bit, answered part of it, really didn't answer the full question. So as I was listening to it, I was like, wait, this just sounds like words that are coming out that's not actually forming an answer, if that makes sense. Then another question came on about maximum employment, basically saying like, can you raise the rates without threatening the labor market? And this was where it actually took a little bit of a turn, because it was starting to come back up as you got into the Q&A section. The markets were coming back up, and it took a turn when he said this exact statement, basically saying saying that we have quite a bit of room to raise rates. So it's essentially hinting at that you can have a higher rate, rather than looking at that lower rate of, or I guess a rate of 0.25%, a quarter rate, right? Rate hike. So you're either looking at something of an increase of like a 0.5% rate hike, or you could see something even bigger than that, which we don't even know. Because from what I understood, what I took from it, and what he said, which nobody else took as I guess as a little bit of a issue, I guess, they all jotted down rate increases and all handed them basically in, and understood what they believe the rate hike should be. But that was kind of like swept under the rug, really. It wasn't anything that was there was a follow-up question, because later they asked, and it took them a while to ask this question, was how much are the rates going to be? Is it going to be, was there a conversation that was, you were discussing an increase above 0.25%? And he kind of didn't answer that question, saying that they didn't discuss that too much, but then previously he said that they all wrote down rates that they believed you should increase the rates by. So I don't understand how you don't have that information. You obviously discussed it, so kind of swept that under the rug as well. So I was like, okay, then we'll leave that as it is. And that's really what I wanted to know. But then there ended up going into some questions about the timing, understanding what the timing is, which he said that he doesn't really know the timing, and he doesn't have an idea of the timing, or nobody has an idea of the timing, and they're taking that day by day. So as they started to talk more and more, when they did ask that question about the 0.25% rate hikes, it indicated that it would be higher than 0.25, just because of the way that he answered all of the questions, and made it seem like, yes, we are in a different time right now. It's definitely different. It's a different situation than we've seen before. So we will make the right decision based on that different situation. So seeing that different scenario means that you're going to do something different, which means raise it a lot higher, right? You're seeing it at 7%. You're seeing it at 5% for the seventh consecutive month. It's something that you have not seen before. So are you going to raise rates the same way that you would before? Probably not. You're going to raise rates a little bit higher and be more aggressive. So I definitely see that the market actually has reacted pretty heavily to a lot of things. And it looks like right now the market's coming back. If I look at the SPY right now, the SPY is still negative. And if we bring that up on the screen, the SPY is still negative today. It does look like it's coming back up, and we're seeing it get back to almost break even for the day. But we did see it drop down pretty heavily during today, just because obviously he opened his mouth and it wasn't the most positive thing possible. But you can see the SPY is really on a downturn today. It's starting to kick back up. You're seeing that bounce off of a level down here of about 428. And seeing that increase a few points there, which is definitely a good sign. A lot of other positions are now getting back into the positive after seeing that little bit of a decrease as well. Seeing that drop down to about $15.63 or so, 65 cents, increasing to where it is now at $16.12. It did get to a high for Amazon for AMC. Let me change this. I can't even change this. For AMC, it did get to a high here of about $18. Sorry that I didn't have that up. But this is basically what I was saying. So we see that it did decrease pretty heavily as soon as he started really opening his mouth. And there's not really much information that I can take into account now because obviously, things are starting to get towards its end. And if I miss some key points, then please tell me. But from what I understand, he did not answer, a lot of the questions and kind of hinted to higher rates. So you see that bounce there. And if we're looking at the SPY, you can see that it is negative. It's, slightly negative, still hovering close to that, break even point, and seeing it at a low of 428 and actually hitting a high today of 444 before decreasing and finding a path down. So it wasn't really the most positive thing because things were going great for a lot of positions, whether it was AMC, whether it was, Zomedica, GME. Seeing Tesla up, seeing the SPY, the overall market actually up, was really, really good to see. But now we're starting to see a downturn and a continuation of what we saw in other days. So not really looking good right now. Hopefully we could see it turn around in the last 30 minutes. And it looks like it was turning around, but now we're starting to see a little bit of a pullback as we get into later end of the day, the last 30 minutes of the day. And you could see that coming back right now. So he must be saying something bad if he's still talking. So that's my update, guys. I know I don't really cover this often. If you guys want me to cover more of this often, feel free to let me know, and we can always discuss that on different days here. But make sure you guys hit that like button, hit that subscribe button, hit that notification bell for more videos like this one. Also, make sure you check out some of the links down below. It does help out the channel quite a bit. But I'm going to get out of here and post some other videos related to some specific investments that we all have, that watch my community. But anyways, I'll catch you guys in the next video.